So what is the new retirement age today? Well, tune in guys, because I'm going to explain what that is and maybe how that retirement age doesn't have to apply to you. Okay guys, so what is that new retirement age? Well, let's be honest, it's different for everybody, right? The new retirement age lately has been getting older instead of younger. However, if you hang into this video, I'm going to show you how you can actually do it faster. You don't have to wait till your 60s or even your 70s, which has become the new retirement age. You can do it a lot faster than that, maybe even your 30s or 40s. Here's how. All right, so we're talking about this retirement age, right? Like the truth is everybody has their own retirement age, but what's happening consistently is it's getting older. People have been living longer and money has been getting smaller in supply. Even though people have been saving forever, do you know that we're just about to hit the 40th anniversary of the 401k for the average Joe, for the average common working man? Now, 401ks have been around since the 1970s, but they were meant only for those high-level executives because in the 1970s, the tax rate was over 80%. The top tax bracket was over 80%. So what would they do? They'd say, let's see if we can give ourselves a break. Let's delay our income to a future date when we were not making as much money because we're high-level executives. Then we'll make less money in retirement and we'll be in a lower tax bracket. That made sense. That's not the case today, guys. Tax rates have changed. They've lowered it drastically. We're almost the lowest tax rate we've ever been. And now people are literally banking on hoping that inflation won't happen and that their tax rates won't be bigger because they won't be pulling out more money down the road. And that's just not cool, guys. Because the truth is, if you ask anybody who's been around long enough, that's even getting close or has in retirement age, they'll tell you their expenses did not get cheaper. They got more expensive into their 60s, not cheaper. So you gotta be careful not to buy into that myth. But so as a result, people are now retiring into their 60s or even 70s. Baby boomers have actually been doing that. My dad worked into his 70s, not because he wanted to, but because he had to. Because when I sat down with him when he was 61 years old as a traditional financial advisor, when I sat down with him, I said, Dad, based on what you've got here, even though you're completely debt-free, you paid off your mortgage in 8 years, you're saving all your money into your 401ks and getting your match from your employer, that should be brainless money. That should be a no-brainer. However, even though you're doing all those things right, you only have about 5 years to live on and then you run out of money. You can imagine that was not what he wanted to hear. But I didn't have an answer for him, guys, because in the financial advisor world, everything, as a hammer, everything looks like a nail. Everything's all about mutual funds, right? Bonds and stocks and things like that. Even annuities and all those other things. All the things they say, there's all these different programs and stuff, they're all the same crap. It's like Mexican food when it comes to financial advice, right? It's like, you know, if you go to a Mexican restaurant, you say, okay, cool, what's in a tostada? They're like, well, meat, cheese, some veggies, onions, yada, yada. Okay, cool. Then we top it with some cheese and beans and more rice and things like that. I'm like, all right, got it. Well, what's a burrito? Well, it's got meat, cheese, some veggies in there a little bit, you know, most of it scattered on top, smothered with cheese on a burrito. Like, oh, okay. What's a taco? It's a burrito that's just opened up. Oh, okay. So I just opened my burrito and I cut a taco. So you're just saying it's all the same stuff. Yeah, that's pretty much it. It's just all the same ingredients packaged differently. That's all financial advice is, guys. Financial advisors are expert salespeople selling you little products, financial products, but they're all basically the same thing. And that's the result. People are not able to retire as well. So you're starting to see a mix. We're seeing people that are delaying retirement till later because they realize they just can't do it yet. You know, well, if the market just goes up a little bit more. Well, what if the stock market goes down right when you're about to retire? Now what? Now you're going to wait another 5-10 years for the money to come back? That's what my dad had to do, guys. He had to wait till his 70s because of that very reason. Markets started tanking, Y2K, then it was like the Great Recession. All these things happened that affected his own life. And as a result, he had to retire not early, but he retired when he was forced to retire. We don't want that for you either. So here's the best thing you can do, guys, is go away from it. Do the opposite of the mainstream. In fact, the mainstream is broke. So what you do is you do something opposite. This is how I was able to retire myself. Because for me, I think the new retirement age is whatever the heck you want it to be, right? When do you want to retire? When do you want freedom? Do you want to wait till you're in your 60s? If so, cool. Your 401k or IRA might work for you at some point in that period of time. But maybe you want to retire sooner. Maybe you're thinking, I would like to be in my 50s and hang out with my kids before they have their own lives, and then I don't have any time with them anymore because they've got their own kids, their own families, and now we've lost that time. We've lost that opportunity because I sacrificed and suffered for so long. Well, what if you could do it sooner? What if you could do it in your 40s or 30s? I actually did when I was 28 the first time. When I quit being a financial advisor and I realized that that stuff doesn't work, I actually went to do things like real estate investing. And as I started to do that instead, when I was 28 years old, I was able to retire. Honestly, it blew my mind. I didn't actually think it was possible, but I did. Now, the recession did hurt me pretty badly. I lost a lot of money in the recession. As a result, between starting a new business and gambling on some bad real estate deals, I had to start over almost. I didn't go bankrupt, but I actually should have, because I ended up having to pay back over $1 million in debt rather than just trying to wipe the slate clean. But I'm telling you this for a purpose, because the fact that I had to dig out of a debt hole with no money, no credit, no way to get out other than just trying to be gritty, right? Just try to work and save my way out of it to the point where I had actually not only paid off my debt, but then had enough money to save and then invest and create passive income. That's what got me to retire by the end of 2016. And I was 39 years old. So if anything, guys, I should give you hope, because you're probably not as a bad position as I was in. You're probably not over $1 million in debt. You're probably not that bad off. You have hope. There are ways to do this faster. So for example, I invest in things like real estate, where I can lend my money out to real estate investors, right? I can lend money to them and then they pay me a contractual interest. They say, listen, I'll pay you 10% a year on your money that you lend me. Maybe I'll pay you 11, 12. I've had people offer me 15 or 18%. Again, I never try to go just chasing after the bigger returns. It has to be the right situation, the right deal. But for the people that have been experienced, they've been around for at least 12 or 15 years, I trust those people more with my money than somebody who said, hey, I showed up in 2019 and made some money on a couple real estate deals. You want to give me money? The answer is no, I do not want to give you money. Come back to me in 2035 or something, 2030 at least, and then we'll talk, right? So when you have those people that have those kind of experiences, you can trust them because they're doing good deals, and they're doing deals that they've done over and over and over to the point it's so boring. And I'll tell you, boring is super sexy. The more boring the investment is for them, the sexier it is to me, especially when I get paid. Getting paid is sexy. And I'm telling you, boring is sexy. At least that's what my wife keeps telling me. Wait a minute, what does she mean by that? All right, well, anyways, it doesn't matter. What I mean is this, guys, that you need to make sure that you're investing for income, not trying to compound interest. Compound your income rather than compounding interest. Best ways to do that, I think, is something that's backed by a real asset like real estate. That's where I like to keep my money. I get to keep my money there. I get to put my money in those different places. I can get rentals and have that increase income each year as they raise rents every year. So I actually increase my income with and even beating inflation. I've also got other investments that go in different places like oil and gas. I got investments that are in things like raw land. I have investments like apartment buildings and so on and so forth. There are so many things you can do. We've even had clients that start investing in things like car wash businesses, right? Where they can actually get paid off the profits of that. Now, there's varying degrees of risk. Yeah, there's nothing that's risk-free. But the great thing is that most of these investments, if not all of them, are backed by real assets. So even if things go wrong, at least you have an asset to claim on where you can get paid back. I've even had bad deals in real estate recently, especially, where I've had a few deals go south, like rentals, for example, where maybe the property manager was a bad property manager and they weren't doing a good job and we're actually not making nearly as much cash flow, but we were still profiting on the cash flow. We're still making money every month, just not as much as we hoped for. And even when we sold the property, still in like 3 years, we made over a 40% return on our money in less than 3 years. Guys, for an investment that was, in my opinion, kind of a bad real estate investment, I wouldn't mind those kind of returns. Heck, most people would be thrilled if they got those kind of returns in the stock market in less than 3 years. But that's one of the things that I do. Here's another great thing too, is that many people think because of retirement ages, right, depending on when you want to retire, there's different rules that apply. For example, you might have heard the 4% rule, which is, by the way, is not a rule. It's never been proven to be a rule, but it's a good selling tactic for financial advisors. They would say the 4% rule is if you have whatever money you have in a retirement account in the stock market, you can live on 4% a year and you shouldn't run out of money. But did you know that that rule was created in 1976 based on data from 1926 and 1976? You know what happened just before that? The US dollar was taken off the gold standard, right? Gold was no longer backing up our dollar, and that's why we saw hyperinflation from the 70s and 80s and so on. And even lately, we've seen hyperinflation, right? That's all happened since then. We had worse inflation since then. So the 4% rule is broken. It's now a 3% rule, if that's even true. But if you want to retire young, like I did, it's a 2% rule. And so if you've got $1 million, you're thinking, I can live on $40,000 a year. No, you can't. If you're young, now that's $20,000 a year. You're now shrunk your money. You have less to live on. So be very aware that that rule doesn't work when you deal with the stock market. But I'll tell you, I've had other clients that have had $1 million, one of which had $1 million. He's told his financial advisor said, great, you can live on $30,000 a year. He said, I don't want to live on $30,000 a year. That's a broke millionaire, technically, right? I'm living in poverty as a millionaire. So instead, he found our Money Ripples podcast. By the way, shout out to the Money Ripples podcast YouTube channel. We went to the Money Ripples podcast, heard our stuff, started investing in different things with real estate in different areas, and he starts making over $100,000, between $100,000 and $130,000 a year of income. Not $30,000, but between $100,000 and $130,000 per year. Guys, that's tremendously huge. That is how you can actually become financially free faster. Now you get to pick your own retirement age, whether that be the new retirement age or not. The retirement age can be yours, and it doesn't have to be in your 60s or 70s. That is my advice for you. If you want to figure out how much that can actually work for you, visit moneyripples.com. We got a passive income calculator on there to show you what you actually do in the next year. Check that out now.